Hello and welcome to IPO Adda. You're watching NDTV Profit, and my guest today on IPO Adda is from TBO Tek. The company is coming out with an IPO which opens on May 8th and closes on May 10th, priced between 875 to 920 rupees. The IPO comprises a fresh issue of 400 crores and an OFS of 1150 crores, so the total size being more than 1500 odd crores. And joining me today is Ankush Nijhawan, who is the co-founder and joint MD, and Gaurav Bhatnagar, who is the co-founder and joint MD. Gentlemen, thank you very much for joining us on NDTV Profit. Let me start with you, Ankush. Give me a sense of the business model that you have. What kind of revenue mix that you get from this model?
Sajeet, thank you for inviting us here today. So Sajeet, we are basically primarily a travel distribution tech platform which is actually powering travel agents across the world in about 100 countries. We are a mediator in between the supply, and supply typically is airline and hotels, and on the demand side, which is primarily the travel agents and the travel operators. So we are the platform in middles, between these two, demand and supply, and the revenue basically for us comes from our airline business, hotels. Hotels obviously is our global business, which is a higher margin business per se, and airlines, we only sell outbound airlines from India as well as domestic.
Gaurav, you are raising 400 crores. Give me a sense of where you're going to use this amount.
Yeah, sure, Sanjeev. Look, because we are a platform business, there are three elements of growth strategy for us. One is increasing our buyer base. So like Ankush said, we have travel agencies across 100 countries using our platform. So we'll continue to grow our market footprint across all the 5 continents, which means adding more buyers. So there is investment in creating a global sales team, feet on street, operational support, etc. Similarly, on the supply side, there will be investment in increasing our supplier base, and by supplier base, not just depth of supply, which means more hotels and better rates on those hotels, but also new types of supply, for example, car rentals, transfers, rail products, etc. And then the third big thing for us is the platform itself, which requires a fair bit of tech and data investment to make sure that the platform continues to scale with the business, becomes more and more user-friendly, and reduces more friction for our travel agents. Apart from this, the business has been growing via the inorganic route in the past as well. So we will be looking at some acquisitions as well.
Any particular area where you're looking at the acquisition? Because I think if I'm not wrong, around 40 odd crores has been earmarked for that kind of acquisition. So is there a specific area that you're looking at?
Look, our business, the industry is very fragmented. There are thousands of companies who either aggregate supply on one side, which is aggregating hotel supply in different parts of the world. And there are hundreds of companies which aggregate travel agent demand on the other side, right? So these are small businesses across the globe. And where it makes sense, we'll be looking at business of these types to roll up into our main business.
Ankush, you mentioned that you mainly look at outbound travel from the country and domestic travel. Why is that? Means why don't you look at inbound travel as well? Because there's a lot of travel that comes into India as well, right?
So Sanjeet, our core thesis of the business is the outbound business, which is basically people living in their own residence and traveling overseas. That's our core, and I think that's a focus which we have been doing in the past and will continue. So inbound is something, I agree with you, but I don't think it's a focus for the company at the moment.
Is there not enough margins of business in that segment, just to understand how it works?
So the margins are healthy there, but I think, as I said, our story is still outbound. So I think, and there's a lot of expansion plans. The market is very, very large for us to keep growing here. So I think that's where our focus would be.
Gaurav, I was looking at your revenue mix. It has concentrated towards hotels and ancillaries over the last 3 to 4 years. And now, if I'm not wrong, roughly 50, 60 or more than 60% is coming from hotels and ancillaries. So is that going to be the core going forward? And India's travel market, which is the airline market, is also a booming market. So do you don't see much of a potential coming in there, because your revenue concentration has moved gradually from air towards the hotels and ancillaries?
So look, Sanjeev, the hotels business is fundamentally more fragmented than the airline business, and hence the margins are better. From our perspective, we continue to grow our top line in terms of gross sales, both on air and hotels. But because the margin is better on hotels, hence you see the revenue mix is changing rapidly towards hotels. But we have absolute belief both in the hotels business and the growth of the airline business. In fact, in India, as you know, the aviation industry is booming and will continue to boom for many years to come. So we'll continue to grow both the businesses, but fundamentally, because the margin profile is different in between the two businesses, the share of revenue will continue to move towards the hotels.
Give me a sense of the margin profile as well, Ankush. 18.8% in the 9-month period, and it has grown from FY23. But is there enough room to go beyond the 20% mark in this business?
Absolutely, there is, Sanjeet, and we will try to build our margins. But I think what's important for us is, our focus will remain on, sharing a lot of margin for our travel agents, because I think it's very important, as if they make money, all of us will grow. I think EBITDA expansion and our margins will come, from the operating leverages. But I don't see, that we'll be increasing our margins in the airline as well as the hotel business.
Give me a sense of the kind of revenue mix that you have, because especially with respect to the model that you have, markup which is there and the commission business which is there. If I'm not wrong, it's coming to roughly a good amount is coming from from the markup business, where your takeaway rates could be as much as 7.25%, and for commission is 2.59%, which is coming in. So if you can give us a breakup, there is the commission business only limited to airlines, or it is also there in some way in the hotels and ancillary business?
So largely the airline business works on a commissionable model, where airlines set the pricing for the air tickets, and then they give us a commission out of it, which we share with our travel agents. Hotels business for the most part runs on the markup model, and hence you will see significantly more revenue coming from the markup model. However, there are certain suppliers who do provide a commissionable model as well within the hotels business.
So your business mix, which is moving towards hotels business, is also one of the reasons why the EBITDA margins are also moving higher, right?
Absolutely.
Yes, absolutely. Look, the EBITDA margins are moving higher because it's an internet business, and the operating leverage is also kicking in. Beyond a certain point, our most of our costs are fixed in nature. So beyond a certain point, all the gross profit that the top line generates can directly go to the bottom line, and hence you see our EBITDA margins grow faster than our GTV.
Give me a sense of your top customers, because the top supplier is around 27% of your revenues, and top 5 is around 57% of your revenues. How sticky are these suppliers for you, and has there been any churn in them over the last 3 to 4 years?
No, look, the suppliers, fundamentally the suppliers see value in what we provide, and there is no cost for the suppliers to participate on the platform. They pay us only when a transaction happens. You have to see, Sanjeev, that the problem that we are solving for a supplier is pretty complex for them to solve themselves, right? Imagine you're a hotel in London and you need to market yourselves to travel agents and travelers in 100 countries. How do you do that? Right, and that is the problem that TBO solves, and because we don't even charge an onboarding fee or a subscription, we're making money purely on a transaction, so our suppliers are very sticky from that perspective.
And the top supplier has been, I think, constant between 27 to 30% of your revenues. So, Ankush, if you can give us a sense of which segment this supplier is from, or who the supplier is.
So, see, out of this also, one of the largest supply you see in the percentage, what you were saying, Sanjeev, is the airline IATA, which is a one single supply. However, IATA is basically a collection house or the body which actually collects money from various airlines through us, right? So it's fair to say that yes, you see a lot of supply concentration there, but if you actually see there are 30, 40 airlines which operate from India, it's more of a payment clearing house. So that is something, which I personally feel is not a risk in a way.
And within the hotels and ancillaries, is there any concentration risk there as well? Because the rest, next 4 is around 20% of your revenues.
See, you have to look at it from a perspective that hotels is fundamentally fragmented, right? There are roughly 1 million hotels listed on the platform. Some hotels we work with direct, some we often buy through third party. So it is not so much the intermediary supply that we are buying from, but the question is that does the end hotel find value in the platform? And I think the answer there is yes. So as long as we keep creating value for the hotels, they will definitely continue to work with us. And historically, we haven't seen any sort of major attrition happen on that.
Is it a trend that we are seeing with respect to the GTV mix which is coming in? Because for the 9-month period, 57% was from India, 57.9% was from India, and 42% odd was from overseas. And that's the overseas percentage is growing as we see. So is that a trend that we can look at? Ankush?
Yeah, definitely. Yeah. Look, when it comes to outbound travel, so when you look at outbound travel as a segment, our GTV mix will eventually start to mirror global trends. And from an outbound travel perspective, India is an emerging market growing at a fast pace, but today in absolute dollar terms, it's a relatively small market compared to say Europe or Middle East or Latin America. So you would definitely you would expect the mix to continue to change in the foreseeable future.
And most of the business, Sanjeev, what you're seeing that 57% is also because the airline business is basically we only sell airlines in India. We don't do any airline business outside India. Very minuscule, but majority of the business, 98% of the airline business is done in India. India, when I say meaning India international and India, domestic India.
So is it fair to say that of the 57 or 58% revenue that comes in from India, 30% is from airlines, right?
So I think revenue is I think what you're saying is mostly GTV.
Yeah, GTV.
I think what the 57 is what you're saying.
Yeah.
I think revenue is much higher. Because obviously the hotel mix is bigger. The revenue is much higher. Therefore, the revenue is, if you see, would be 70 in favor of global markets of ours and 30% India. But the GTV is almost 55-45 is primarily because of the airline business, what we do in India.
Since you earn a good amount of margins from hotels and ancillaries as compared to airlines, can you give us an idea of what is the kind of margin picture for both of them? Gaurav?
See, the hotels business operates at a gross margin of about 8% and a gross profit of about 5.5% out of that 8. The airline business happens around about 2.5, 2.6% and a gross profit of about 1.4%.
Okay. I just also need an update on one of the risk factors which I saw in your RHP, which this is with respect to an ED case involving bookings from Bangladesh, and then the compounding that you have applied to RBI for. Can you give us a status check on that, and what is the kind of contingent risk that can come in, and have you provided for that risk in the balance sheet?
So, Sanjeev, the application is to be filed with RBI basis the show cause we had received. It creates some potential cost of the compounding fee, which has been duly disclosed in the prospectus. It has not been specifically provided for as yet.
Ankush, since your business also deals with a lot of inbound travel, especially for the tourism industry, what is the kind of growth rate that you're seeing with respect to the travel which is happening?
So we don't do any inbound business.
I'm talking about hotels and other stuff.
So there's no business as TBO.
So,
So you mean from India? So I think, yeah, I think the mark. Yeah, go on.
Yeah, go ahead.
No, I think the market in India, as Gaurav mentioned, obviously is growing rapidly, as more prosperity increases and the economic growth happens. And I think the young India today really wants to, kind of travel out and, have experiences. So I think we are significantly a decent player in the outbound hotel business in India, but I think there's a lot of opportunity for us to scale and grow as India prospers, I'm sure, and more aircrafts being added. The outbound stories only from here on will grow, and I'm sure we will be one of the biggest takers in the coming years.
Gentlemen, it was a pleasure talking to you today. Thank you very much for joining us on NDTV Profit. Your IPO is opening on May 8th and closes on May 10th, price between 875 to 920. Total IPO size of 1550.8 crores, which includes a fresh issue of 400 crores. Thank you for joining us on IPO Adda.